Hello traders, this is Scott Downing from BigTrends.com, and I want to take a few minutes today to review with you some of the major news items that have been happening and the effect that they're having on the markets, as well as giving you an outlook heading into next week, which is going to be for us as options traders a very important week, with it being February expiration for those standard options. So let's go ahead and take a look at the S&P 500 index, the actual index itself, the SPX. And what I want to really focus on is the initial gap down that took place this morning. You can see after the markets opened, we had a shot down of about 4 to 5 points on the SPX. Reached down to lows around 1316. Then the news broke out of Egypt as Mubarak announced that he was going to relinquish power, resign, and step down immediately. Obviously, there's been a lot of tension there in that region, and that's been a strong area of focus for market participants. Anytime the Middle East there's any concerns, if you remember back 2009 around Thanksgiving time, when there were some concerns about those sovereign debt issues in Dubai and the markets really tanked that day after Thanksgiving. Obviously, that's a very important area to the world economy, and as little unrest as possible is needed for the U.S. markets, especially the stock markets, to stay healthy. So the markets rallied there from that low of 1316 all the way up to an intraday high of 1328. So 12 SPX points really in just a matter of about an hour. Obviously that subsided a little bit, at least some of that momentum, and we've just been choppy going to the side the rest of the time. But looking at both the hourly chart and then zooming out to the daily chart, you can see the SPX remains in a very strong bullish trend, continuing the pattern of higher highs and higher lows. You can see that with our CCI indicator as well as our %R indicator clearly above those upper levels that we have marked in blue, where anything above that is going to be a confirmed bullish trend. Shows that the strength continues to be on the bull side of the market, and it's really going to take a lot of effort from the bears to really beat this market down. Obviously, with the news out of Egypt of Mubarak stepping down, you're going to see a big move take place in oil. Now, you're not seeing it as much in the OIH, in the oil service holders, but in USO, the actual United States Oil Fund ETF, you can see oil's back down around near-term lows. Obviously, there was been a lot of concerns over the past few weeks with what's going on in that area. And as we zoom in a bit, you can see the spike that took place really in just a matter of 2 days as the protests in Egypt really started to initially intensify. That has obviously since subsided, and we're all the way back down really to where we started before those protests began. So all of that ground has been relinquished for oil. Oil's back down there around critical lows and looks poised to really break down even lower. It's a very critical time right now for oil, given that, once again, looking at our CCI and our %R indicators, they're nearing a development of a bearish trend. This is a daily chart. The red line here is going to be our 200-day moving average. It's converging right now with the acceleration band on the downside. So if that were to break both the bottom acceleration band as well as the 200-day moving average, you definitely could see a lot of downside in oil, and that's something that a lot of people would be concerned with. So you definitely want to pay attention to that. Final thing I want to talk about today is the news out of the government that, as well as from the White House and the Treasury, that there's going to be limited government backing of mortgages going forward. At the end of the day, they're looking to limit or wind down the role that Fannie Mae and Freddie Mac play in the overall mortgage market. They want to get that back in the private sector where the companies can drive that information. Obviously, that's driving up interest rates. You see a little bit of a pop in the TLT here. You're really going to see that in the mortgage market. Don't be surprised if you see interest rates really rise over the coming days on the heels of this news.